Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Good morning and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us. Well, let's check what's going on a global level with macro and US Treasury yields. Falling on data showing inflation easing in line with forecasts, while jobless claims also fell, reinforcing expectations US interest rates will remain on hold at the Fed's September policy meeting. The Personal Consumption Expenditures Price Index rising 0.2% last month, matching June's gain, taking the annual rate to 3.3%. Excluding the volatile food and energy components, core inflation increased 4.2% year on year in July after rising 4.1% in June. Meanwhile, US jobless claims fell last week to a seasonally adjusted 228,000, which was below estimates. And this comes ahead of the non-farm payrolls report tomorrow, with the unemployment rate forecast to remain at 3.5% in the States. And ahead of that next policy meeting, Atlanta Fed President Raphael Bostic has cautioned against further monetary tightening, saying, "I feel policy is appropriately restrictive. We should be cautious and patient and let the restrictive policy continue to influence the economy, lest we risk tightening too much and inflicting unnecessary economic pain." Well, the US two-year Treasury yield fell to 4.85%, while the 10-year was down to 4.09%. And the US dollar gained against most major currencies, the Aussie dollar trading at close to 64.8 US cents. And the Commonwealth Bank has revised its initial Chinese GDP forecast for this year, lowering it to 5% from the previously projected 5.4%. Conversely, the bank has adjusted its growth predictions for next year in a positive direction, raising the estimate to 5.3% from an earlier projection of 5%. The bank saying these adjustments stem from the anticipation that the government will introduce substantial economic stimulus by the end of the year, aiming to provide stability to the economy. Whereas ANZ maintains its Chinese GDP forecast of 4.9% for this year and 4% for next year. Well, speaking of China, I caught up with Brad Gastwirth from Unearthing Opportunities. He gave his view on China, but before that, I asked him about those latest earnings results on Wall Street with Salesforce.
It really came in strong across the board, Andrew. And we spoke about this, I think, several times on your program. And when they gave their last guidance, which was incredibly strong, you had that nice move in the stock. And I continue to see Salesforce as a must-own for large cap portfolio from a global perspective or a U.S.-centric perspective. They're executing on all cylinders. They have a great exposure to AI, and then really the execution continues to go through.
Yeah, so as you mentioned there, those shares did rally. And how much of this is AI driven, given what we've seen, particularly with the likes of NVIDIA?
Yeah, so I think a lot is when they gave their guidance 2 quarters ago was the first sort of indication that their data analytics division, which was through an acquisition, their data analytics is an AI driven, and it's really gathering a tremendous amount of data. And analyzing it, that's growing tremendously fast. That's doing really well. That part is, certainly the AI-driven aspect of the story. I mean, their core CRM is very strong. That's more of a recurring revenue model, which is doing quite well. But the hype and the reason why you're getting inflated valuation is the AI part of the story.
Yep. All right. Elsewhere, Brad, let's take a look at what's going on with Apple at the moment. What products have they got coming on which you're perhaps in the market may be excited about?
Yeah, well, they just announced the date for the new iPhone 15, and that will be coming in the middle of September. I believe it was September 12th that they put out. It's the typical time frame. The one thing I'm hearing is that there's actually production issues on a few different parts. So I don't think you're going to have as large as a launch, in terms of units, as they typically do for the first launch. Typically, you get anywhere from like an 80 to 100 million iPhones in a typical launch for their first quarter, and I think it's going to be shy of that because of some yield issues. But the yield issue should be, they should be short-lived. But that's just something from picking up with conversations. The one other thing that's interesting just from a more of a manufacturing perspective is it looks like they're going to try to use 3D printing for their watch. And I think that makes a lot of sense for streamlining it. The cost, I'm sure now they're able to get it down to something that makes sense. The number of units is significantly below what they do on an iPhone, but the units are still substantial. So it'll be interesting to see how that actually works. On the manufacturing front, it's not big enough to really make a huge dent or hurt anybody significantly from the watch side. And then lastly, I think you're just looking at a company's valuation that's gone parabolic. The company's been executing on the software and services side. That's what people are going to pay attention to. But the iPhone itself is what drives still a significant portion of profitability. So if there's some issues, that's something that people will pay attention to.
Yeah, 3D printing manufacturing, that's quite revolutionary. Of course, that has been around for a while, hasn't really replaced factories as such. That was the expectation. What's the potential here? Where are they doing that?
Yeah, so it's going to be in-house. So they'll be buying the equipment and doing 3D in-house. And that's so the thing that's interesting, and you're right. I mean, it's definitely a shift from an electronics manufacturer to go that route. Again, the units are substantial. It's not like you're talking in the hundreds of thousands or tens of thousands. You're still in the million unit range. So that's it's a substantial number for 3D printing. But what blows my mind is the 3D printing for food, where you're getting food that's being made through 3D printers. And I'm not talking just cakes, but you're talking about some of these, fancier restaurants now are offering, I think the future, everything's robotic, unfortunately, which has a big sort of negative aspect to a lot of, global economies. But there's some really, really sort of interesting things that are happening in 3D printing all the way from food to electronics.
Yep. All right. Well, it remains to be seen, I guess, just how large a print you can get there. Maybe even cars, perhaps. You never know. Let's go there just in terms of EVs, what you're seeing there at the moment. VinFast, the Vietnamese EV company, eye-watering valuations. Why is that, Brad?
Yeah, Andrew, I mean, it's such a good topic because this stock has been one of the retail favorites. It's a stock du jour over here. You've seen valuation on day one when it got the NASDAQ listing. It was valued more than GM or Ford. And this is a company that only produces around 11,000 automobiles compared to several million at those other companies. It had a larger valuation. It made no sense at all. I went on your program that night and talked about how if you could short it, you should. That stock's down significantly since that point. And then it's been very volatile. Like last night or 2 days ago, it was down 16%. It has tremendous moves. It's at a $20 billion valuation. It still does not make any sense to me. This is not a technology company. This is an EV automobile company. It's not a Tesla. And I think people are getting confused of the difference. And, Tesla, people still think about the automobile side. Remember, they probably have the largest supercomputer in the world that they're building. So, there's more to Tesla than just the EV side. But the other part of the EV news, Polestar, that Swedish EV maker, also had a pretty big loss. They're also in the tens of thousands, I think a little bit north of 10,000 production. These EV companies, the newer ones, are getting incredibly high valuations. I don't think they're warranted, and I think you see, many of these companies go bankrupt in probably the next 5 years.
That's interesting because, of course, they're looking to challenge the market dominance of Tesla. Is that achievable? Well, then, of course, you've got those startups essentially, but you've also got those legacy car makers that are trying to play catch up. Who's going to win the race, Brad?
Yeah, I mean, and that's really, Andrew, it's the most important question. And I think you're going to have the difference. So, I mean, I used to have the Tesla P85D. So I loved it because it was a rocket ship, 0 to 60, 2.4 seconds. But the problem with that car is it had nothing inside. So Tesla was an incredible technology company. But if you want this luxury automobile, it doesn't compare to anything like a Mercedes or a BMW or any of the higher end brands. So, those core, like look at a Ford that's been around over 100 years. They know how to make automobiles for people. Tesla knows how to make electronics that drive. It's not fancy. It's not comfortable. It's just a really good electronic vehicle. So, I think down the road, as we get closer and we're already starting to get those electrics from the legacy, you're going to continue to see them be very strong competitors on the EV front. Now, when it comes to full autonomous driving, Tesla will have the lead because of their technology, and I think that's quite important. I think Tesla will have an issue with the service side because production's ramped significantly faster than the services side has ramped. So there's a lot of moving parts with the Tesla story. They are an incredibly great technology company. It doesn't make any sense as a vehicle or an automobile company at this valuation, and nobody's really valuing it as such. I think it's too rich to be buying at these levels. I think they still will do well. They'll be a leader in technology. I think the incumbents will, like even a Ford or GM, I don't think you can really call them out of the race. I think they're moving and adopting it really fast. I think they beat out a lot of the startups.
Yeah, interesting. And of course, you got the challenge coming from China as well, and the likes of BYD and other firms there. Brad, just let's round it off with what you're seeing in China at the moment, of course, with that weak data that continues to come through, the latest being disappointing manufacturing data. As a result, we did see those US listed shares of Chinese companies such as JD.com and Baidu lower. What are you seeing there? What are the risks ahead?
Yeah, and I mean, I've said this, for I think a couple of years now, or at least a year on your program. I am away from buying Chinese companies that are listed abroad. If you want to have exposure buying Chinese companies, you need to buy A shares in China or through the Hong Kong index. I continue not to want to own Chinese companies that are listed in foreign markets like the US. I think there's a lot more risk on what could happen with regulations, et cetera. But that being said, from the input side, all my checks, and I talked to a numerous number of suppliers in the region and different executives, and things just do not sound good. The property market is in a state of mass chaos. There's probably enough empty houses for the amount of people in China, and right now they're getting taken care of by the local governments. Central government will likely come in and do something in probably in the near future and in a medium term. But it's a mess, and unfortunately, that's going to trickle down to other parts of the global economy. But right now, I have not found any really, anything that's been really that exciting, or positive coming from China. The one interesting thing, I was just going through the Lululemon results, and they actually had an uptick from China. So I guess that's the only thing so far that I've heard positive from the region, and maybe it's just because the sheer size of the upper middle class there. Still spending a lot of money is spending on higher end retail, and Lulu was a beneficiary of that.
Brett Gastwirth from Unearthing Opportunities. That is the global view on this Friday. Stand by, the open is just around the corner. We are expecting to open low with SPI futures currently off just over 0.5%. Stay with us.